Cotton is back in focus as global production takes a dip, prices remain under pressure, and trade tensions add more twists to the market outlook. We're breaking it all down today, from planting decisions in the US to shifting demand overseas. I'm Johanna Bota, and with us today is StoneX's market intelligence analyst, Raphael Bulascoschi. Welcome, Raphael. Let's start with giving us a quick update on the current cotton season.
Yeah, hello, Joanna. Hello, everyone. In the latest WASDE report, the USDA revised its projection for the 24-25 global balance sheet, bumping up local global consumption by 0.6% to 116.7 million bales. That increase came mainly from adjustments in countries like Vietnam and Pakistan, which have been offsetting weaker demand from other countries such as China. On the production side, there were only minor changes for 24-25, which is pretty typical for this time of year. So, with consumption up and production holding kind of steady, we ended up with slightly lower global ending stocks compared to what the USDA was showing in April. Even so, it's worth pointing out that ending stocks for 24-25 season are still expected to be pretty high, actually the highest since the pandemic, and that's the main factor behind the price action that we've been seeing on market recently. One key point from the May WASDE is that it brings the first numbers for the 25-26 season, which is already going into the ground in the northern hemisphere. Globally, stocks are expected to stay pretty high, pretty much in line with previous crop year, 24-25 crop year, which should help keep the current price dynamics kind of in place. Uh, but now, as planting wraps up in the United States, the market will start focusing more on how the crop develops through the summer, which usually brings some more volatility to prices and make the market action really interesting. Current expectations for this year's U.S. crop point to a drop in planted area in the country, which at first sight could be a factor to support prices. However, the USDA is projecting a lower abandonment rate, meaning that the United States should end up harvesting a slightly bigger crop, adding to the domestic stocks. So, going forward, the market talk will focus mainly in weather and crop progress, but also about how competitive the US can stay globally, since exports are the main outlet for American cotton. Well, I think overall those are the key drivers we'll be watching when it comes to US stocks and price movements in the market.
Now, forgive me, but you did mention planted, harvested areas, abandonment. Could you explain what these terms mean?
Sure. Yeah. When we talk about planted and harvested areas, and especially the abandonment rate, it all ties into the fact that cotton farmers don't always harvest everything they plant. That can happen for a number of reasons. Maybe the weather wasn't so great, maybe pest pressure was so high that those factors impact the yields that the farmers see on the field, or maybe even the market price just doesn't justify the cost of harvesting. In some cases, prices are so low that the grower decides it's better to walk away from the field, and often they have crop insurance that help offset some part of the loss, depending on the region and the specific policy they've got. So overall, I think it's a mix of both agronomic and economic decisions that influence what actually gets harvested, which can impact the final production that we will see for the crop.
Now, cotton prices have been under pressure for some time now. While New York cotton has been moving mostly sideways this year, the longer term trend tells a very different story. New York cotton is down about 35% from the highs we saw in March 2024. So, what's behind this decline?
Yeah, like we talked about earlier, global stocks are pretty high right now. In 24-25 season, China surprised the market with a really strong crop, which reduced their need to import, putting pressure on exporters like the US, but also Brazil. This has this has had an impact on prices, especially in the US, which depends heavily on exports for its demand. Historically, China has been the biggest cotton importer in the world. Although in recent years, some Southeast Asian countries like Bangladesh, Pakistan, and also Vietnam have become more relevant. Still, China remains a major player, and it took about 30% of both US and Brazilian cotton exports last year. At the same time, Brazil has been ramping up production year after year. Last year was a record crop, surpassing the previous record crop that was 2023. And this year, 2025, is expected to break records once again. StoneX Brazil, which have its own estimates for Brazilian production, is projecting a 7% increase in the Brazilian crop, which should reach around 3.9 million tons. So Brazil continues to have big exportable surplus, which keeps the country ahead of the US as the world's largest exporter and adds more competition to the global market, putting downward pressure on prices. Overall, we have a more competitive environment in global market with the emergence of other exporters, as well as lower level of international demand from importing countries such as China. All this leaves the sorry all this leaves the US in a very delicate situation, which is reflected in these low prices you mentioned. And then you got other headwinds like interest rates and ongoing trade tensions that are making the price picture even tougher.
Well, let's stay with that because, like many other soft commodities, cotton has also felt the weight of the tariffs. Given the ongoing trade tensions that we were just mentioning, is it fair to say that this could pave the way for even more Brazilian cotton to make its way into the Chinese market?
Yeah, exactly. Tariffs have really shaken up things in a number of markets, and cotton wasn't spared from all this movement. For US cotton, exports are absolutely critical, like I've already said. Over 80% of what the US produce gets exported. So when the possibility of trade retaliation comes into play, it hits hard. It hits pretty hard to the American cotton. That's what happened with China, where retaliatory tariffs made it harder for the US cotton to compete. Even though the countries, US and China, recently agreed to temporarily cease tariffs, uncertainty still hangs over the markets. In that kind of scenario, like you said, Brazilian cotton tends to gain ground because these importer countries need to get it from other origins. It becomes a natural alternative for importing countries, right? And Brazil's been working very actively on getting ground on in the international market for a while. It comes from grower associations, private companies, but also the government. They all tied up together to negotiate broader market access, especially across Asian countries. So yeah, this whole trade war backdrop could actually help accelerate those efforts and strain further strengthen Brazil's position in the global cotton market to the detriment of the US.
Well, thank you, Raphael. I really appreciate you joining us today. And thank you for watching. For more financial content like this, please like and subscribe to our channel.